Let's be honest, sometimes trying to get smart about something or just keep up feels like wading through, I don't know, just so much information.
Absolutely. Information overload is real.
Yeah, so our mission here is to cut through that noise. We take your sources and really try to pull out the core stuff, the essential insights, so you walk away informed fast.
Exactly. You brought us this material today. It's specifically a transcript from a YouTube video, and we're here to sort of guide you through it, highlight what's important, maybe what's surprising, what really matters.
And today we're taking that deep dive into the world of ETFs, exchange-traded funds.
Right. And like you said, our source is that YouTube transcript. It's pretty packed, actually. Goes into what ETFs are, how they work, and specifically highlights 10 different ones.
So that's our goal then, to unpack this source. We want to get a handle on ETFs as they're presented here, see how they stack up against other investments according to this video, and then really dig into those 10 examples.
And the source definitely paints a picture, doesn't it? It talks about them being a potential way to make money, good for learning, relatively safe because they're diversified.
And easy to trade. That comes up a lot.
Yeah, that ease of trading seems key.
Yeah.
Okay, so let's start there. Based on this source, what exactly is an ETF?
Well, the source says it's short for exchange-traded fund. Pretty straightforward. It then draws a comparison saying that they're similar to mutual funds or index funds
How so?
because they hold a group of stocks or other assets, pool investor money, and often they're tracking a specific index like the Nifty 50 or something.
Right, okay. That makes sense. Pooling assets,
Mhm.
tracking an index that sounds familiar from mutual funds. But the source must highlight some differences too.
Yeah.
Because they are different.
Oh, absolutely. And the differences highlighted really change how you interact with them. That's the core point here.
Okay.
So unlike mutual funds, which, as the source points out, usually only trade once a day based on that end-of-day NAV, net asset value.
Right, you put your order in and it executes at the closing price.
Exactly. But ETFs, the source emphasizes, trade on an exchange all day long, just like if you were buying or selling a single stock, like Reliance or Apple.
Ah, okay. So that's a huge difference in terms of timing and, well, control, I suppose.
Yeah, and it impacts buying and selling directly. With mutual funds, there's often a process, maybe paperwork, definitely waiting for that day's close.
Right.
But with ETFs, the source highlights you can buy or sell basically with a single click whenever the market's open, much faster.
Which must mean the price you get is different too.
Exactly. You don't get that end-of-day NAV price. The source notes you get the real-time market price at the very moment your trade goes through.
Okay, got it. So trading speed, intraday pricing, stock-like mechanics, those are the big practical distinctions this source is emphasizing.
Precisely.
So how does the source suggest you actually, go about using these ETFs then?
Well, first, the practical bit. You need a DMAT account. It mentions Fires as an example platform and points out that its search function is handy for finding specific ETFs by name.
Okay, standard stuff for trading. Anything specific about choosing or trading them?
Yes, and this was interesting. The source puts a lot of emphasis on checking the volume.
Trading volume. Why is that so important according to them?
It explicitly advises looking for ETFs with high trading volume. Even suggests checking like the top volume lists on the NSE website.
Okay.
And the reasoning, according to the source, is liquidity. High volume means lots of buyers and sellers. So when you decide you want to sell your ETF units...
There's likely someone ready to buy them easily.
Exactly. But if an ETF has low volume, the source warns, you might struggle. It could be hard to find a buyer or you might not get a good price. Makes sense.
Yeah, that does make sense. Do they give any, specific numbers to look for?
They did suggest a target range, sort of a benchmark, around 5 lakh to 15 lakh or more in daily volume. Something in that ballpark suggests enough activity.
Good to have a rough guide.
Yeah.
And what about the trading style? Day trading, holding.
The source leans towards positional trading or overnight holding for these particular ETFs. It doesn't seem to recommend them for super short-term intraday trading.
Okay, more of a hold for a bit approach, maybe days, weeks, or longer?
Seems like it, yeah. So, okay, we've got the basics from the source, what they are, how they trade differently, and this key advice on checking volume and maybe holding them positionally.
Right, so now we can get into the specifics. Those 10 ETFs the source highlighted, what are they? What do they invest in? What did the source actually say about each one?
Yeah, let's unpack them. The source seemed to have a few favorites. Where should we start?
Let's go with the ones that seemed, really prominent in the video. First up was gold bees.
Ah, yes, gold bees. The bees part, the source tells us, means it's from Nippon, India.
Right, and it Does what it says on the tin, basically. It tracks the price of gold.
Invest in gold, yeah.
And the source really liked its accessibility. It highlighted you can invest in gold this way at a much lower entry price than buying, say, physical gold bars or coins.
It mentioned an example price, didn't it? Something like 75 rupees when the video was shot versus physical gold being much more.
Yeah, something like that. And it tracks the gold price movements, obviously. It's framed as pretty safe because, well, gold's price isn't likely to just drop to zero, right?
Right. The underlying asset has value.
So, good for learning, good for maybe dipping your toes into investing. Simple, easy to buy and sell because it tracks a major commodity. The chart observation was just that, well, it follows the gold price.
Makes sense. And right alongside it was number 2, silver bees.
Yep, another Nippon India BE fund. Tracks silver, invests in silver.
So pretty much the same logic as gold bee.
Pretty much. Lower entry point for silver exposure, tracks the price, seen as fundamentally safe and that silver isn't going to zero. Good for learning, good for investing.
Any specific chart notes on this one?
Yeah, the source mentioned the chart showed a recent drop from an all-time high. It actually described it as forming an M pattern, which is a technical chart pattern suggesting a potential top or reversal.
Interesting. But still fundamentally sound.
The source seemed to think so?
Yeah.
Like gold, unlikely to stay down forever given silver's uses and value?
Okay, so from commodities. Where next? Number 3 was quite different, wasn't it?
Yeah, shifting gears completely. LT Gilt BS. Still Nippon India.
LT Gilt, long-term government securities.
Exactly. It tracks long-term Indian government securities, specifically ones maturing in 8 to 13 years. So it invests in government bonds.
And the source seemed quite positive on this one.
Very positive, called it very fantastic, I think. The appeal is that you're lending money to the government, basically.
And you get returns.
Yeah, the source mentioned potential annual returns in the range of like 8 to 10%. And crucially, it's considered very low risk because it's government-backed.
So good for safety-conscious investors, maybe?
That's how the source positioned it. Suitable for long-term money-seeking returns with, a high degree of safety. The chart apparently showed slow, steady growth over years with very little jumping around. Good volume noted, too.
Okay, that makes sense. Let's move to broad market trackers. Number 4 was Nifty BEs.
Right, another Nippon India one. This one tracks the big one, the Nifty 50 index.
So it invests in the top 50 companies on the NSE.
That's the idea. It mirrors the performance of India's largest companies. If they go up, the ETF should go up, and vice versa.
And the safety aspect here is diversification.
Exactly. You're spread across the top 50 businesses, not just relying on one. The source framed it as offering consistency over the long haul, even if maybe the returns aren't as explosive as picking a winning individual stock.
Price mention was around 257 rupees at the time. Any chart observations?
Just that it had recently followed the Nifty 50 index downwards in the market correction that was happening.
Okay, and then we went international with number 5, Moon 100.
Right. The source linked MON, or Moon, to the provider Motilal Oswal. And this one tracks the Nasdaq 100 index.
So U.S. tech stocks, mainly?
Primarily, yeah. The top 100 non-financial companies in the U.S. Nasdaq exchange. A lot of big tech names in there.
So this gives you exposure to the U.S. market?
That's the angle, yeah.
Yeah.
A straightforward way to invest in those major U.S. tech companies. It's seen as relatively low risk just because the whole Nasdaq isn't likely to collapse. But
Good.
the chart observation was interesting. It was also in a downtrend recently, showing that same M pattern the source mentioned for Felkipilis. Similar to the Nifty chart at the time, actually.
So even big international indices can have significant dips.
Absolutely. Important reminder, good volume was noted for this one too, though.
Okay. Now, the next couple seem to shift strategy a bit away from just market cap. Number 6 was Alpha.
Yeah, Kotak Alpha. This one tracks the Nifty Alpha 50 index.
Meaning it tries to outperform.
That's the concept. It invests in 50 stocks selected for their potential to generate alpha, basically, to beat the market benchmark. They're chosen based on factors suggesting they might grow faster.
Higher potential return, then.
Potentially, yes.
Yeah.
The source even gave an example of a huge past return, like 140% in 1.5 years. But, and this is a big but,
Higher risk, too.
the source explicitly pointed that out. Because it's chasing outperformance, it can also fall much harder during market downturns compared to something like Nifty Bs. Volatility is higher.
Did the chart show that?
Apparently, yes. High growth previously, but also a significant recent fall. Example price was around 43 rupees.
Got it. High potential, high volatility. What about number 7, Momentum 50?
Right. This one tracks the Nifty Momentum 50 index. It invests in 50 stocks from the wider Nifty 500 universe, but selected based on their recent price momentum.
So picking stocks that are already going up strongly.
Kind of, yeah. It's about trying to ride the current winners
Yeah,
based
well,
on their recent price trends. Less about future potential like alpha, more about current strength.
how did the source describe this one?
Just generally as a good ETF. Volume was noted as decent. The chart apparently showed it went up nicely initially, but then, like many others, got caught in the recent market downtrend. Example price, around 50 rupees.
Okay. Moving on, number 8 was Next 50 IETF. The IETF suggests.
ICICI Prudential, according to the source. And this tracks the Nifty Next 50 index.
So the company's just outside the main Nifty 50.
Exactly. The 50 largest companies after the top 50. Often called the Junior Nifty, or the next tier of large caps, gives exposure to those potentially up-and-coming large companies.
Chart observation.
Similar story to many others followed the recent market downturn. Price example was around 64 rupees.
Right. And the last two focused on specific sectors, didn't they? Starting with number 9, Bank B.
Back to Nippon India,
Yeah.
tracks the Nifty Bank Index, so it invests in India's top banking stocks.
And the source saw banking as important.
Very much so. It mentioned banking along with IT as key drivers for the country's growth.
Interesting chart note on this one.
Yeah, the source mentions seeing a W pattern reversal on the chart that's often seen as a bottoming pattern followed by an uptrend, and then it was trading sideways when the video was made. Good volume noted here, too.
Okay, a bit more positive action there recently. And finally, number 10, ITBES.
Also, Nippon India tracks the Nifty IT Index, investing in the major Indian IT companies.
Another key growth sector, according to the source.
Yes, but the chart observation here was pretty dramatic. It showed a significant fall after hitting an all-time high.
Any reason given.
Interestingly, the source, perhaps slightly jokingly, attributed the fall partly to Trump G's arrival, likely referencing geopolitical events or maybe policy changes impacting the IT sector around that time.
Okay. Good volume noted here as well, and an example price around 36 rupees.
That's the 10.
Wow, okay. That is quite a mix the source walked through. When you line them up,
Yeah.
you've got commodities like gold and silver,
Government bonds for stability.
broad Indian market indices like Nifty 50 and Next 50,
Key sectors like banking and IT,
strategy-based ones like Alpha and Momentum.
and even international exposure with the Nasdaq tracker. It's quite diverse.
Yeah, it really covers a lot of ground. And what's insightful is how the source, across all these different types, kept coming back to those core perceived benefits we talked about earlier.
Right, that they're generally presented as, maybe safer than picking single stocks because of the built-in diversification.
They're easy to trade. That point came up again and again, real time, click of a button.
A practical way to learn about different markets or sectors without having to become an expert on individual companies.
And of course, the potential for investment growth across these different areas.
Exactly.
So look, if you are trying to get the gist of what ETFs are from this particular source and see some concrete examples of what's out there, this deep dive should give you a pretty clear picture.
Yeah, it positions these specific ETFs as, accessible tools for learning about investing, and maybe for participating in different market movements.
You've just absorbed the key takeaways about exchange-traded funds and looked at 10 specific examples, all distilled directly from the source material we examined today.
Now, something the source touched on briefly was looking at the charts, mentioning things like M patterns and W patterns, support and resistance.
Right, those technical analysis concepts.
Which raises an interesting point to think about, doesn't it? Many of these ETFs, especially the broad index ones or the gilt fund, are presented as diversified, perhaps longer-term holdings.
Yeah.
So how much does that really granular day-to-day technical chart analysis, kind of often used for timing stock trades, how much does that really matter when you're considering these kinds of diversified vehicles, as described in this source anyway? Is it the main driver or just one small piece of the puzzle?
That's a great question to ponder. How much technical timing versus long-term view is appropriate here?
And look, as the source itself suggested, if learning more about those concepts, support, resistance, chart patterns, if that caught your interest based on how the video mentioned them.
Then that's maybe a path for further exploration for you, building on what we've unpacked today.
Absolutely.
Well, we hope this deep dive has been a valuable part of your learning journey.